Today, we're being joined by U.R Bhat, the director at Dalton Capital Advisors. Mr. Bhat, thanks a lot for coming on board to talk to us. The markets have snapped the 4-day losing streak, and we're seeing some kind of strength coming back in. Do you think it will sustain? I mean, what kind of movement actually do you project in the near to medium term for Nifty?
Well, the sentiment seems to be weak, at least for the short term. So therefore, I think the market will probably test 10,000 pretty soon, even though about 10,150 is a very important support and it's sort of hovering around that area. But I think if this were to be broken, 9,700 is a very good support. So I don't think it will break that in the near future. But having said that, I think not everything is very bad about the market. We have the GDP situation is reasonably fine. The inflation situation is reasonably fine. It is just that there has been a general sort of sentiment change after the scam that we found in some of the public sector banks, and then some reverses for the ruling party in some of the by-elections. Plus also there has been this problem about revisiting sort of globalization, as it were, with tariff wars sort of playing out. I think all these issues have put paid to the bull market that we were in, but I don't know how the global trade war is going to shape up. So I think that on the international scale, I think that is the one that will determine the direction of the market. But domestically, I think interest rate hikes or the movement of interest rates also will be very, very important. How liquidity shapes up, and these are the things that will probably give direction to the market.
This is Siddharth Bhamre joining in conversation. Welcome to ET Now. Private sector banks, they have significant amount of weightage, and they can single-handedly drive not just Bank Nifty, but also Nifty in the direction which they feel. Now, if you look at the problem with banking sector, it is completely in PSU space. Yes, there are some corporate banks which were reeling under pressure of NPAs, but that's easing out. But why private sector banks are not performing? Bank Nifty is underperforming. 80%, 75% of weightage of Bank Nifty is private sector banks. Then what is the concern which market has, which probably we are unable to assess at this point of time when it comes only to private sector banks? I understand they will gain market share, there would be a credit offtake, and they would capitalize on the growth. But what are these challenges which market is seeing but we are not?
Well, I think even if you take the Bank Nifty, the large weight even among the private sector, non-public sector banks are with the large private sector banks, which are basically quite largely corporate banks. And what is affecting public sector banks willy-nilly affects these large private sector banks also, which are mostly in the same consortia. So therefore, I think it is only those private sector banks which have kept off corporate lending in a big way, or infrastructure lending in a big way. They are the ones who probably do well, and they continue to be the star performers. So it is a big private sector banks which are also lending to corporates. They are the ones that are affected, and they are more or less sort of clubbed along with the public sector banks, even though the extent of stress is much less, and at least they have enough capital. But I think in terms of earnings growth, in terms of the stress situation as far as their assets are concerned, I think things are better than public sector banks, but still not as good as those private sector banks which don't lend principally to the corporate sector. I think that is the reason why you find this mismatch between the private sector banks' potential performance and the Bank Nifty performance.
Okay, that's why you're seeing that kind of parity between private sector and public sector banks. And from what you're saying, I'm guessing that you feel that this trend is very much going to continue, and that's despite whatever might happen with recap or what you're seeing under the Insolvency and Bankruptcy Code. This is your view that private sector banks are a better bet than public sector banks?
Well, absolutely. Not the largest private sector banks, but the mid-sized private sector banks, which basically are onto consumer lending and retail lending. I think they are the ones who will probably be outperforming everybody else, because because of the IBC, most of the corporate lenders, at least the ones which are in stress, we have a new sort of regime as far as RBI rules are concerned, where at the first incipient signs of sickness, you have probably got to, you don't have too much time to nurse this, and you have to go to NCLT, and then the whole process, resolution process starts. So while this is good in the long run, but in the short run there is a lot of pain here, because quite a lot of marginally stressed corporate customers would probably would end up in NCLT. So therefore I think for that, especially public sector banks, there is a huge amount of capital that will be required if they have to play their role in financing the growth of India. So therefore I think you have about 2/3 of the banking system, which is the public sector banks, which are probably out of commission, because half of them are in prompt corrective action phase, where they cannot expand their asset base. So therefore the whole financing of the growth has to happen by the private sector banks, out of which at least the top 2 or 3 are in probably not much better shape than PSU banks, because they are corporate lenders. It is only the retail lenders among the private sector banks which will continue to do very well, and the chasm between the retail private sector banks and the large public sector banks will continue.
Right. Let's also talk about some of your other sectoral bets. You're fairly bullish on the auto space. Which is the segment that you're betting on within the space? And also, several analysts are saying that, it's only in the short to medium term that the autos are likely to do well because of the cyclicality of it. Is that also a concern for you?
Well, I think there would certainly be some amount of cyclicality, but if you have seen from the time we have been witnessing slowdown from the last, say, about 5-6 years, the only sector that has really shown month-on-month growth is the auto sector. So despite the domestic slowdown, I think this sector has continued to give a very good account of itself. So therefore, while valuation may not be very much supporting an immediate purchase, but if you have to be in equities, I think this is one sector which, despite the economic downturn, or rather the deceleration of the economic growth, this particular sector has continued to do very well. So therefore, I think there is certainly a lot of wisdom in buying into this sector if you have to be in equities.
Mr. Bhat, before we thank you, 2 spaces which generally are considered as defensive, one from quite some time, which is FMCG, and other is new, which is IT. What is your stance in these 2 names? We are seeing that FMCG has done fairly well even in this kind of volatile market. We have seen stocks like HUL performing well. Some of the other FMCG stocks have also done well. And last couple of quarters, despite to everyone's surprise and disbelief, IT sector has done well, and we are not seeing any meaningful correction in this correction, in market correction. Do you think that the worst is behind IT? When we see on our channel, big company managements are more bullish than some of the commentators who feature on our channel.
Well, as far as FMCG is concerned, this is a sort of a steady performer. It is difficult to make a valuation argument in support of investment into FMCG, but nevertheless, these have been very, very steady performance, high ROE businesses, companies that are growing at the high teen sort of growth numbers, and I think they will continue to do well. They will probably never get cheap. So therefore, if one has to be in India, I think these are the sort of sectors, subsectors one has to be invested in. As far as IT is concerned, I think yes, there is now certainly some pickup in momentum as far as the US market is concerned, because most of these export to the US. Even in Europe, things are looking up. So therefore, the demand for their products and services would probably be better. And after quite some time now, you have also seen the rupee sort of weakening a bit. So therefore, certainly it is much better than what it was probably about 6 months or 1 year ago. But I think going very aggressive on IT may not be the right thing to do, because they still have they still have to grapple with the sort of change in business model itself, and that is something that quite a large number of these large IT companies are still grappling with. So therefore, I think one needs to be slightly cautious there. But on the whole, on the margin, I think this is one sector where one should be neutral to slightly overweight.
Right. Thanks a lot for joining us with